Hello and welcome. My name is Jeremy Whaley from TradeMaestro.com. I hope you're doing fantastic. And in this video, I wanted to address the Trade Maestro Trading System or the Maestro Trading System. And I've got a lot of questions about this. A lot of people want to know, like, what's my philosophy? How do we approach this? And so I wanted to do this video just to kind of put in one spot the entire Maestro Trading System and kind of give you a high-level overview on the whole thing, right? So let's get going here. The first thing is to answer the question, what is it? I mean, what is this thing called a Maestro Trading System? Well, we won't get into the definition of Maestro right now, but the trading system is simply my philosophy on trading. That's really what it is. It's my philosophy on trading. These are the general principles, the general process that I take everybody through, whether it be my private coaching clients or the students that work through my training. Everybody kind of goes through this general process because it is what it takes to be a great trader. And it's a really simple process. I'm going to share that with you right now in this video. So those are kind of the two biggest things. And most importantly, it's a system that works. That's really it. It's a system that works. It can really help you be a great trader as well. So it's my philosophy on trading. It's the process to take everybody through, and it works. I mean, what more could you want? All right, that's why you need to watch the rest of this video. So I've broken this down into principles. The first principle is trading is simple. This is an overarching philosophy that I have about the market. Trading does not need to be complicated. If you're spending hours doing analysis, you're doing it wrong. If you're sitting there stressing if your trade is going to be crashing tomorrow and collapsing, you're doing it wrong. If you're poring over fundamentals and trying to, get all the numbers and crunch them and estimate what's the future of the value of the stock, what's the present value of the stock, you're doing it wrong. And I understand. Give yourself a hug. Forgive yourself because it's not your fault. They told you it was complicated. But it ain't complicated, folks. Trading is simple. This is my number one principle. It's my number one philosophy. I have been doing this for 12 years, teaching people how to trade stocks, how to trade options, futures, Forex, all that stuff. And it works. It works when you keep it simple. But when you make it complicated, it doesn't work. So keep your trading simple. In fact, it's as simple as 1, 2, 3. There's really 3 steps to trading, 3 steps to all of it. And you can break it down as follows. Number 1, the analysis process. Analyze the trade so that you can pick a direction. Is the stock going up? Is it going down? Is it going sideways? You got to be able to pick the direction. The only way you can do that is through analysis. And I've got a really simple process for that. In fact, I teach people how to analyze a trade in 10 minutes or less. If you're spending more than 10 minutes, you're doing it wrong. You're spending too much time on the trade analysis, right? So that's the first step. Second step is to apply an appropriate strategy. Once you know the trade direction, you got to apply the right strategy. Third step is to manage your risk. So this is my 3-step process. I've been working through this with people for years, and it's what I do in my own trades. It's just the process. This is it. This is the process for trading. It doesn't need to be any more complicated than 3 steps. All right. So that's my first principle: is keep it simple. My second principle, just go through these 3 steps basically. So my second principle is to pick the trading direction. Pick the direction of the stock. And picking a direction is just simply to answer the question, which way is this trade going? Is it going up? Is it going down? Is it going sideways? Because those are the only 3 directions it can go. So you never have trades that go backwards. You never have trades that go in circles. Trades are either going to go up in price, they're going to go down in price, or they're going to basically stay the same price, moving sideways in some sort of a sideways trading pattern. That's all that stocks do. That's it. Okay, so now you know whichever one it is, you got a 33% chance of being right. It could go up, it could go down, it could go sideways. You got 1 in 3. Those are your odds of probability. So you say, well, how can I possibly know which direction the stock's going? Well, we're going to go through an analysis process, and it's a little bit more complicated than what I'm going to share with you right now, but I'm going to give you the nuts of it right now, the nuts and bolts of it. Kind of the main process, which is to identify the trend. And the tool that we're going to use for this is your moving averages, and it's really a simple process. It looks like this right here. If the price is above the moving average, then you're in a bullish trend. If the price is below the moving average, then you're in a bearish trend. And if the price is moving through the moving average, or said differently, if the moving average is moving through the price of the stock, then you're in a sideways move. That's it. That's it right there. I mean, those are the 3 principles. And if you follow that little process right there, you're going to always know the direction of the trade. You're always going to know the trend, and you'll be able to identify that. Now, there's some other nuances that we can add to it, but this right here, and the screen I'm about to share with you, this is the basics. And if you just get this part right here, you can go make more money than you ever imagined in the stock market. So let me show you some examples here. In fact, let me just take this full screen so you can really see it. Notice that everywhere you see the stock price above the moving averages, the white thing and the green thing, those are the moving averages. Everywhere the stock price is above that, you're in a bullish trend. Okay, that's pretty simple. Stock's moving up. I'm going to be bullish on this thing. Every time we drop below, every time that white line drops below the green line and the stock price is below that, you're in a bearish trend. Stock's moving down. All right. That's it. That's it right there. Let's look at another one here. That was on SPY. This is on ExxonMobil. Same thing. Look on the kind of the area where I'm putting this green dot right now. See, the stock price is above the white line. The white line's above the green line. You're in a bullish move. Okay. Now this happened again just a few months later, where stock's above the white line's above the green line. You're back into your bullish trend. Okay. We had it happen over here where I'm putting the green dots. Okay, stock's above the white line's above the green line, you're back into a bullish trend. Okay, now what about the bearish trends? Well, over here we got a red circle, stock's below the white line's below the green line. Now you're in a bearish trend. Over here, right in the middle, big old bearish trend right there. Stock's below the white line's below the green line. You're in a bearish trend. Over here on the right side, kind of the right middle here, we got another red circle where the stock's below the white line's below the green line, you got a bearish trend. Then over here on the right side, you got another big bearish trend. Okay, now I'm going to put some yellow circles on here. These are some of the sideways moves. It's way beyond what we can talk about in this little short video, but this gives you an idea of how we identify the trend. It's really simple. It doesn't need to be complicated, folks. In fact, I always say, if you can't do the simple stuff, there's no way you can do the complicated stuff. So get the basics worked out, because we can knock this out very, very quickly. I can teach you this in 1 or 2 lessons tops, and now you've got it. And then once you have that, now you can go to any stock, any time frame, and you can apply these basic principles, and you can know the direction of the trade. So that's the first step, know the direction of the trade. The next principle, which I call it principle number 3, it's kind of step number 2, is to apply that appropriate strategy. And it's really simple. Once you figured out the direction of the trade, strategy is just simply, how do we play it? How do we play the market? So, we understand the direction of the play is pretty simple. It's either up, down, or sideways. Now we could look at it from an option standpoint. We could look at it as buying stock and look at it shorting stock. Lots of different strategic ways to look at it. It doesn't really matter. It's not like one strategy works and one strategy doesn't. The truth is they all kind of work. They all work. It's just you got to do it at the right time. And that's one of the biggest lessons I had to learn when I was learning how to trade. One of the first trading courses I signed up for, 20 years ago, was they were going to teach us, I think it was 18 different trading strategies to make money in every market. And what they didn't teach me was how to read the market so that I could actually know when to use the strategies. I got all these strategies, didn't know how to use them. So that's the second step. It's not the first step of trading, it's the second step. The 3-step formula. I've already given it to you, but I'll just recap it for you really quick. Identify the trade direction. It's the first thing. Know if the stock's going up, down, or sideways. Apply that strategy, and then we're going to use the good risk management. So when we think about strategies, there's 2 basic strategies. We got long and short. I've already mentioned we could trade options, we can do other stuff, but just keep it really simple. We could trade long or we could sell short. Those are the 2 strategies. And if you're buying a stock long, then you're owning something and you're going to be bullish on it. You're expecting the trade to go up in price. So if you do your analysis, you figure out the stock's going up, then we want to go buy the stock. It's that simple. If you do your analysis, you figure out the stock's going down, well, we want to short the stock. We want to sell it, because when you sell something, you owe it. We're going to sell it up front, and then we'll buy it back later. So that's going to be a bearish strategy. These 2 strategies take care of at least 2/3 of market conditions. It's that simple. At least 2/3 of them are taken care of with these 2 strategies. You don't need to understand options. You don't need to understand all that complicated stuff. Even though I love it, I'm personally an options trader, and I love teaching it. I love watching people's eyes light up about it. But you don't have to do all that. Keep it really simple. Keep it straightforward. You can just buy stock, or you can sell short. And if you can do that, then you can make money in the market. And so here's what it looks like on a chart. Down here in the kind of the middle area where it says buy low, that's when you want to be buying. Notice what we are. We're above the moving averages. Averages are crossing up. There's your bullish buy signal. It's right there. That took us all of like 10 seconds to make that analysis. Okay, so you start by buying when the stock is lower, and it starts moving higher. And then you get to the top up here, and we're going to sell at a higher price when we start getting some exit signals. Now, that's obviously way beyond the scope of this video, what the exit signals are and whatnot. But here's the key. The idea is buy low and sell high. And when you do that, that's called a long trade. Okay, buying stock low, selling it at a higher price. Now you can flip this. We're going to sell short, and when we sell short, it's just simply you see the price of the stock's coming down, and so you decide to sell it, and then you come back and you buy at a lower price. We call that selling short. And that's it, folks. These are the basic strategies of the market. Buy long for a bullish trade, sell short for a bearish trade. And like I said, I mentioned this earlier, if you can't execute the basic things, then you'll never be able to do the complicated stuff. So learn these basic things first, and then we can come behind it. We can add the options. We can add the straddles and strangles and condors and butterflies and all sorts of great strategies that are wonderful, but you don't have to make it complicated, folks. If we start there, you're just going to be overwhelmed. Keep it simple. So principle number 1 is keep it simple. Principle number 2, pick the direction of the trade. Principle number 3, apply the appropriate trading strategy. Number 4 is what? Manage your risk. Manage your risk. Once we've picked the direction of the trade, once we've applied a winning strategy, all we have left is to make sure that we don't go broke on this thing in case we're wrong. Because here's the reality, folks. Stock market does some weird stuff. I mean, some days it just does some weird stuff. And we never know what the weird stuff's going to be. All we can do is manage our risk. And so how do we do some basic trade management here? Well, number 1, we want to have a plan. We're going to have a plan, and I'm going to teach you how to do that. So you got to have a plan for your trades, and that's going to look like an entry price, a target, and a stop. There's your plan right there, okay? Next, we want to make sure that the reward or the profit that we're going to make on the trade is greater than the risk that we're taking on the trade. And there's a specific formula that we use for that, where we get into the trade and where we get out, that's going to be your reward. And if you get in and you stop out for a loss, that's going to be your risk. And we want to make sure that the reward is greater than the risk. And then the next piece of this is just simply to size our positions relative to your account. One of the biggest reasons people lose a lot of money in the stock market, and the reason they blow out their trading account, is because they didn't use good risk allocation. They're like taking huge risks on an individual trades. There's no position sizing. And so that's a major piece of our risk management. And then finally, the last piece is scaling our risk. We're going to scale our risk with our account size. All right, so these are some basic principles. Obviously, I can't get into that right now. It's way too in-depth. I go in much deeper detail with some of my in-depth training, but I just kind of want to give you this basic Maestro trading system. So you've got it all. I didn't do a recap slide, but I'll just recap it for you really fast here. Number 1 principle, keep it simple. Number 2 principle, pick the direction of the trades, up, down, or sideways. Next, 3rd principle, is we're going to apply an appropriate strategy. If the stock's going up, we're going to buy long. Stock's going down, we're going to sell short. And for now, if the stock's going sideways, just don't touch it. That's the best thing to do. If you don't know how to do a sideways strategy, you just don't mess with it for now. Later, we can add sideways strategies in. So that's the 2nd principle. Final principle is to manage your risk. And if you do some basic trade management, basic risk management, folks, there's no reason to ever blow out your trading account. And here's the crazy thing. When you do something this simple and you keep it this simple and you actually get disciplined to actually execute these things, you follow basic trend principles and all the stuff that I started teaching you right here, when you start doing that, you're going to be amazed to figure out that you can actually beat fund managers and people that are so-called professionals. In fact, did you even know 93% of the so-called professionals, the fund managers, 93% cannot match or beat their S&P benchmarks? Look, facts don't lie. Statistics don't lie. It's a SPIVA study. They put it out every year. And some years, the percentages shifts just a little bit. But you can go look it up. Look up SPIVA study. And what you'll discover is the longer that they're in the market, the worse their performance is. It's crazy. It's absolutely crazy. And so when you figure out these basic trading systems, like this Maestro, what I call the Maestro trading system, once you figure that out, and once you get really nutty about applying it, you can beat people that you never imagined that you would be better than. And it turns out you're actually better than them. So I hope you guys have really enjoyed this video. I hope you've learned some stuff. Thanks for watching it. And listen, if you're ready to take your trading to the next level, the next step is to just go through my Pick Winning Stocks Challenge. It's actually the whole Maestro trading system expanded. It's expanded into a fully fleshed out training program. And what you're going to learn during this challenge, as I like to call it, and I'll tell you why it's a challenge in just a minute, but what you're going to learn is you're going to learn how to pick the direction of the trade. stuff we talked about right here, you're going to learn how to do that. You'll be able to do it in 10 minutes or less. You can look at any trade, small cap, mid cap, large cap, doesn't matter. No cap. It could be a no cap stock. You can still pick the direction of the trade once I'm done teaching it to you. Then you're going to be able to apply the appropriate strategy. Which strategy should you trade? You're going to be able to know how to do that after the Pick Winning Stocks Challenge. Then you're going to know how to manage your risk. And I'm going to show you how to write a specific trading plan, exactly a trading plan that you need for your trades. Give you a little formula for that. And then I'm going to show you how to choose the stock, because not all stocks should be traded. Yeah, there's over 3,000, between 3,000 and 4,000 publicly traded stocks. There's even more ETFs that are out there. Which ones should you trade? Are they all great to trade? The answer is no. How do you know? How do you pick the stock that you should trade? All of these questions are going to be answered because the name of the challenge is Pick Winning Stocks Challenge. What do all these questions do? They teach you how to pick a winning stock. That's the ultimate benefit that you're going to get from the Pick Winning Stocks Challenge. Now, why do I call it a challenge? Call it a challenge because we're going to do this in 21 days. Every day for the next 21 days. When you get signed up, just count forward 21 days from now. 21 days from now, your entire trading career could be totally different because what's going to happen over the next 21 days, every day you're going to get a little bit of training. You're going to get a new series of videos. They're all going to come straight to you. You're going to get an email. You're also going to have a membership area that you can log into. You can access it. You can come back and you can revisit it. You can watch as many times as you need to. You're going to have some group coaching that goes with it. You have all the stuff that you need to support you over the next 3 weeks so that 3 weeks from now, you look back and you say, wow, now I know how to pick winning stocks. And that's the challenge. The challenge is to go from where you are right now, which if you're like the vast majority, 85, 90% of market participants, they're trading, they understand the market a little bit, but they're struggling to get ahead. They're struggling to pick winning stocks. And everybody I've talked to, it's the number one question I get. How do I pick a winning stock, Jeremy? They always say either how do I do it, or they'll say, well, what's a good stock right now? Which one should I buy? They're skipping straight through the question, going straight for the, just give me the goods. Which one should I buy? I'm not going to tell you which one to buy. I'm going to tell you how to know which one to buy so that you can go out there and you can do it yourself. And in the next 21 days, we can get this solved. We can get you that new skill set. You can go out and you can trade any market that you want to. So all you need to do is get yourself started right now. I've got a link right below this video here. Get yourself signed up for the Pick Winning Stocks Challenge. We're starting a new one all the time. So go ahead and get yourself signed up, and I look forward to seeing you there. And as always, if you like this video and you want to learn some more stuff, subscribe. I mean, who wouldn't be subscribed to the Trade Maestro channel at this point? Yeah, that's you. You need to be subscribed to the channel so you get a notification every time I put a new video up there. And also, I got some great resources below here. You can link to my website, trademaestro.com. We've got the 7 trading secrets. We've got the Pick Winning Stocks Challenge and all sorts of other great resources. So check them out and pay attention. Look for my next video because it's going to be even better than this one. And this one was great, right? I know you loved it because you stayed all the way to the end. So get yourself subscribed. And until next time, happy trading.